When you think about investing in emerging market debt, a couple of things that I'd be thinking about. Firstly, it is an adjunct to a high quality bond portfolio. So you don't want to be just chasing yield and sort of shifting all of your high grade bonds into emerging market debt. High grade bonds do have a place in a portfolio. Even when yields are so low, you may not get income, but you can still get an important risk diversifier from equities and growth assets in times of difficulty in markets. So the first thing is get your foundations right in your fixed income portfolio. And then if you've got that in place, emerging market debt can be a really interesting diversifier and income generator on top of that. The other thing to think about is emerging markets perform very well over long periods of time, but they do have more volatility potentially than your more G3 type bond yield. So you have to take a longer term perspective rather than try and be too tactical about your investment. And finally, you want to have a broad palette that you invest when you go into emerging market debt. Probably best not for many people to invest in just hard currency or local currency or only investment grade, but try and keep, to the extent that it makes sense in a portfolio, the broadest possible opportunity set so that you can take advantage of the opportunities and also you have opportunities to move to more defensive areas should that be something that a manager sees as more prudent for at that stage in the cycle.